Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Bulls Attack because that's exactly what happened on Friday. The bulls attacked, tried to salvage the week, but they just couldn't do it. All the major indices were down in the red for the week. Now, we're going to focus on the Dow Industrials today. I'll show you the side-by-side of the Dow, the S&P, the NASDAQ composite. Actually, let me just go there right now. And then we'll come back, take a look at the Dow and the Dow transports, take a look at the Elliott Wave picture on the Dow Industrials, take a look at a couple of the indicators that we've got, and then talk about, I know we've talked about in the past how the FANG stocks, everybody except Apple has been underneath their 200-day moving average. Well, Apple's there now. I know they blipped down below there in March, came back up strong, but now they're well underneath the 200-day moving average. We'll take a look at that. All right, so here's the picture of the Dow, the S&P. The Dow has been down for what? For 6 weeks in a row. The S&P 500 has been down 6 weeks in a row, and the NASDAQ has been down 6 weeks in a row. The Dow was down 703 points for the week, 99 for the week on the S&P, and 339 on the NASDAQ composite. Now, you can see what has happened because of the move that happened on Friday. The bulls attacked. They brought this up dramatically. Yes, this looks like a hammer on the S&P, and I'll say from a candlestick pattern, it looks like a hammer. That is the best look is on the S&P. This one, not quite so much. It's got that little shadow up above, which you can have a small one, ideally more like the S&P. The Dow is similar too. The tail's not nearly as big. So picture perfect wise, it's this one, but there's no guarantees on this either, just so you know. Many times, you can get a retest back down. And I'll tell you what, if this doesn't hold and we get a break below this low, there's going to be some heavy duty capitulation selling going on. So right now, I think it's a bear market rally, and we'll see what happens. I want to take a look at the Dow versus the transports in here. So the transports broke this trend line intra-week this week. Now, we didn't close below it, but we still broke below that trend line. So I think that's a sign of weakness. I'm looking to see some follow through on the transports. This is not a hammer on the transports because the tail is not big enough to be a valid hammer. Just so you know, a tail needs to be 2 to 3 times the length of the body in here to be a valid hammer. That's just one of the criteria. So we got really, really close to taking out the low over here on the week of September 19th, but we didn't quite do it. 946 here, the 968, got really, really close. So I still would like to see we come down, take out this last week's low, and take out that September low. We're going to be a little bit more in sync with the way the Dow's doing and rounding over and taking out the lows in here. So that's just a side-by-side comparison. You can see how they look. All right, let's go back and take a look at the Dow Industrials and look at the Elliott Wave picture. So here's where I actually started. Didn't mean to start there, but it's where we're at. I think we're in a third wave, a third minor wave to the downside. And I know you guys have commented. You say you see the overlap. Yes, I'm treating this as a leading diagonal. Is every little parameter on here perfect? I'm not quite sure, but I think we're close. But, I think it counts best as a leading diagonal. It's definitely not an impulse wave. And I just right now, based on the way all the price action is, this is acting beautifully like this. And I'm looking to see more follow through to the downside down here. I'm expecting where I've got this minor wave 3, this is down here as a projection of just a normal length wave 3 when I look at the length of wave 1, okay, based on Fibonacci relationships between the wave structures. So yeah, we need to get 5 waves in here and impulsive waves within wave 3. And, typically you're looking at the motive waves 1, 3, or 5 are typically the ones that have a tendency to extend. And typically one of those three will extend, sometimes two. And if you have one that extends, you're usually looking for wave 3 to be the one that extends. It's not a rule, it's just kind of a guideline. So keep an eye on that. And we're in a third of a third right now. Okay, so that's the picture we've got on the Dow Industrials. Let's take a look at some of our indicators. So the percent of stocks above the 200-day moving average over here on the S&P 500. We're sitting at 30.82. Now, I've been talking to my members and been talking about the conditions that I'm looking for to see true capitulation and a good sign of an intermediate bottom, and we're not there. Okay, we're not even close. This is not even close to being like what we had in 2020. Let me just go there. Here's 2020, by the way. Here's how extreme we got. You notice how we're trending down here. We got readings below 10%. Yeah, that got pretty extreme. But even if you go to the end of 2018, when we had all that selling occurring in December, remember October, December, and the Christmas Eve massacre. Well, look how we got down here well below 20 in terms of the level of trading. Again, we're not even close to being there. Okay, so we'll see. We're getting into that territory. I just don't think we're there, and it may take, I don't know, a couple more weeks. I mean, we'll see. You never know how fast this thing's going to move. And yeah, are we going to get snapbacks? Yeah, we're going to get snapbacks all along the way. Okay, so that is the percent of stocks above their 200-day moving average on the S&P 500. Let's take a look at the McClellan oscillator. Now, there was a lot of tension in the market here when the market was down. It was deeply oversold, down here minus 227, to say 228 when you round it. When you get below minus 150 on the McClellan oscillator, you're in severely oversold territory. So now what happened with the attack of the bulls on Friday? We came back up. We're now at minus 44. So basically, we're right back kind of in the neutral zone or very close to it. And when I think about that, what does that do? That basically is like a pressure release valve. Okay, so there was a lot of pressure, a lot of tension. All of a sudden, you could just hear the air, hear the pressure coming out of the valve as we come back up into this territory. And yeah, maybe we push up, a little bit more up into here, but it just brings it back, and the market's totally ripe to just take it back on down again. Okay, so that is what's happening with the McClellan oscillator. But what about the summation index? Now, the summation index is the cumulative of the McClellan oscillator. Look where we're sitting with the summation index. I'm trying to see if it cooperate here, and it's not going to cooperate. Okay, let me just tell you what the reading is. I've got it written down here somewhere. Minus 2077. Minus 2077 is where we're sitting. Lower than February, March, or earlier this year. Back over here in March of 2020, it got to minus 2832. In December of 2018, it got to 2258. And those are the only two times that were lower than where we are now since 2008. So yeah, we are rapidly approaching those kind of extreme levels, but this is also an indication of the kind of intense control that selling has on the market. And, when you think about the pressure that would happen I talk about a pressure release. Well, here's what happened on Friday. 2,640 stocks up, 719 down. This is on the New York. I color-coded green, dark green, when it's greater than 2/3. When the advancing as a percent of the total of advancing and declining is greater than 2/3, I colored green. If you notice in May, we've only had 2 days that have been colored green, but we've had 4 days that have been extreme in terms of down below. In the opposite direction, I color red if it's less than 1/3, where less than 1/3 are positive. Okay, so I'm looking for extreme readings in here. So you can see the kind of history. I just keep that. I like the color coding. It just jumps out. It's easier to track. But the other thing I wanted to mention on this, I almost forgot, is the volume. So the volume was pretty extreme on Friday with the attack of the bulls. Well over 90% of the volume was to the upside in terms of advancing volume as a percent of advancing and declining volume. And of course, that got reflected in the trend. Look where the short-term trading index closed, 0.31. Very, very extreme reading. When I get readings that close down below 0.5, it gets the attention in terms of an extreme in that direction, okay? Just like when you start getting closes up above 2 and higher in the other, going in the opposite direction, we're getting extreme selling being reflected, okay? Well, we got some extreme buying reflected, so we'll see what kind of follow through we get right now. All right, that is the picture there on the McClellan Oscillator Summation Index. Now, I talked about the FANG stocks, so let's just take a quick look, okay? Let's just quickly revisit. Facebook, well below the 200-day moving average. I'm going to come back to Apple last, okay? So we want to go to Amazon, well below the 200-day moving average. Netflix, same thing, well below the 200-day moving average. Google, same thing. Here's the 200-day moving average. Microsoft, of course, we got to throw Microsoft in there, and then we add that into the mix, well below the 200-day moving average. Not to the extreme of a Facebook or Netflix, but still well down. And so now Apple. Apple just kind of stuck its toe in the water right here mid-March, bounced up hard, came back down, and now we're definitely well below the 200-day moving average in terms of what's happened here, especially with the price action that happened this last week. Took out a pretty key important support area here at 154.46. And when I look at the Elliott Wave picture on the Apple, it's very similar to what I've got on the Dow Industrials. And of course, Apple's a part of the Dow Industrials. I think we're in a third wave. I think we're in a third minute wave of the third wave. So we're in a third of a third and, working our way down. So yeah, are we going to get some bounces in here? Yeah. But right now, this is the overall picture I've got on Apple. So looking for the wave count to continue to unfold in here. Okay, that is the picture for the market, at least from the Dow Industrials and some related indicators. The bulls staged their attack this on Friday. We'll see what kind of follow through we get. And of course, you can always tell that the bulls are making an effort when you look at, and let me just flick back over here and look at the weekly. All you got to do is look at the candle, and you can see how the bears were taking it down, and the bulls staged a comeback right back up into here, trying to take it positive for the week. Couldn't do it. We'll see what happens. All right, that's it for this week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. If you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.